Hello ladies and gentlemen, and welcome back to the Finance Channel. My name is Daniel, and today we will be analyzing Revolve stock, ticker symbol RVLV. In this video, I'm going to go through Revolve's fundamentals, financials, balance sheet, analyst expectations, etc. And make sure to stick around till the very end of the video, where I give my buy targets for the stock. Just for a bit of background here, Revolve is currently trading right around $18 a share at a market cap of $1.3 billion. The stock IPO'd back in June of 2019. There was a lot of hype surrounding it, so it shot up to around $40-50 per share and has seen a downtrend ever since. Now, if you are new here, please make sure to subscribe to see more videos just like this one and hit that like button as it really helps the channel out. If you have any companies or ticker symbols that you want me to take a look at, make sure to comment them down below. Now, if you don't know what Revolve is, they're one of the leaders in women's clothing. They target mainly Gen X to millennial type consumers, and their clothing is mainly on the higher end. Generally speaking, they're targeting the top 10% of income earners. They have a wide variety of different clothing, things like dresses, casual wear, shoes. They are expanding to the beauty sector. They have hundreds of their own brands along with hundreds of other recognizable ones on their site. They use artificial intelligence to predict fashion trends in the future, so they're better prepared for what's going to happen 3 to 5 years down the road. They have an even higher end type store called Forward, and this is where you get your Balenciaga, your Gucci, your Valentino, your Burberry, your much higher end clothing. So this is mainly targeting the top 1% of income earners, also mainly targeted towards women. Now they do have a male section for both Revolve and Forward. They're kind of experimenting with this as of right now. They're just kind of starting. Right now it's mainly just women. I believe like 80 to 90% of their customers are women. So if the male section does end up succeeding, that's going to be great for them. But if it doesn't really affect their revenue to the extent losing their female audience would. Now, Revolve has a very interesting way to market their products. They use influencers to market their products. They partner with influencers to show their products off to a large fan base. You've got millions of people following these influencers. And if those millions of people see that influencer buying Revolve clothing, they're much more likely to purchase Revolve clothing for themselves. This is a great way to market and shows that the management team knows what's up. It's incredible because not a lot of companies are doing this, but Revolve is. Now, Revolve, this is a quick Google trend that I found. It tends to kind of peak around the Christmas season, which is why I kind of see that up and down, but there's a very steady line since they became a company. Obviously, you can see where COVID took place, paired with where Christmas kind of ended. It's been on a drop, but it's kind of recovering as of right now. In my opinion, Revolve is going to fully recover by next year and just going to continue to grow. Now here we have their income statement highlights. So this is from Q2 of 2020. This is their most recent presentation. Net sales went down 12% year over year from 161 million to 142 million. Gross margin went down from 55.8% to 50.5%, but their net income increased from 12.7 million to 14.2 million, and it increased 12% even though both their net sales and gross margin went down. We're going to take a look at this in a second here. Their adjusted EBITDA also went up by 10%. Operating metric highlights. Active customers grew by 13%, which shows that more people are kind of browsing the site, which is expected since everyone's locked up inside. Total orders placed went down 10%, and average order value went down 26%. Still at $204, which shows that people going to Revolve are spending money. And again, that used to be $275, so eventually that's going to recover. So again, I see no problem with this. This is all expected with COVID, since everyone's not going out as much, which explains why there's a decrease in sales. Now, category performance is a key driver of year-over-year decrease. Their dresses were normally their highest selling product, yet they were the biggest decline. They saw the biggest decline in sales. We can see this dresses here. You could see the comparison between 2019 and 2020 at the bottom here, dresses as a percentage of total net sales mix. And I mean, you could see a general downtrend. It has been recovering ever since, and I'd assume it's pretty close to being fully recovered at this point. But To make up for that, loungewear, beauty, and accessories grew 100% year over year. So kind of one thing for another, even though the dresses decreased, another category, which you'd expect, actually increased. Now, net sales by geography, US sales decreased by 15%, yet their international sales actually increased by 3%. International mix of total net sales in Q2 of 2019 was 16%. Now it is 19%. I said this before, and I'm going to say it again. I believe that Revolve's international segment will be the growth driver in the future. I think that the European market, the Asian market, will be huge for Revolve. And I mean, you can just see it here. In the middle of a pandemic, their international sales actually grew. This is a clothing company. Look at all these other retailers like Nordstrom or Macy's. This is a company that grew their international sales, which is great. I think international sales are going to explode over the next 3 to 5 to 10 years. And this is kind of just proof of that. Now, segment net sales, you could just see the decrease here by 12% in Q2 of 2020. Yet it is still significantly higher than Q2 of 2018. So even though it decreased, it didn't decrease that much. Forward segment net sales also decreased by 12 million. Again, still higher than Q2 of 2018. So no real worry there. Now segment gross profit. Also, Revolve segment gross profit went down 20%. And forward segment gross profit went down by 23%. Again, expected things with COVID. And now this is why they reported a bigger profit than they did last year in Q2. This is why they reported that $14 million profit, where last year they reported a $12 million profit, even though their revenue decreased and even though their average order value decreased and along all of those different things. Their cost of sales actually went up from 44.2% to 49.5%, but fulfillment went down from 3.3% to 2.7%. Selling and distribution went down from 14% to 13.3%. Marketing went from 15.4% to 10.3%. General and administrative expenses went from 11.6% to 11%. Along all categories except cost of sales, their expenses went down. Now I just made a few notes here so we don't have to go through all of this, but mainly the increase in cost of sales was due to COVID, which is again expected really. The fulfillment, the reason that went down was because of a new automation that they're using for fulfillment. But this is yet to be fully recognized because obviously the revenue went down. So once that revenue goes back to where it was, this fulfillment impact or this automation impact will be fully felt then. Selling and distribution went down because of lower returns, which again makes sense. Less people wanting to have other people touch their clothing because of COVID, obviously. And then marketing. This is really interesting here. I'm going to read this. Marketing leverage reflects a successful pivot in cost-effective brand marketing initiatives in Q2 2020 at a much lower cost compared to spend in Q2 2019 on in-person events, as well as year-over-year efficiency in performance marketing spend on digital advertising. They have introduced a new system of marketing that allows them to spend less but have the same general impact, which I think is just incredible. Again, this is going to be felt fully next year when more people are willing to buy clothing. Because right now everyone's stuck inside, especially now winter's coming. Once COVID's over, this is really going to be felt. Their general and administrative expenses went down because of reduced employees, furloughs, things along those lines. Diluted earnings per share went up 11% this year from 18 cents last year to 20 cents this year, or in this quarter rather. Cash flow highlights, their inventory went down from 102.5 million to 64.5 million. So this just kind of shows how they're using the situation. Instead of spending money on new products, they're just using what they already have. And this just shows how well they've adapted to this situation. Net cash provided by operating activities went from 6.8 million in Q2 of 2019 to 53.8 million in Q2 of 2020. So this is cash they've received in the past quarter just from their operating, just from what they've done. Capital expenditures went from 4.8 million in Q2 of 2019 to 0.8 million in Q2 of 2020. They're spending less money. Free cash flow went from 2 million in Q2 of 2019 to 53 million. Just incredible things happening. Now, this is their balance sheet, and this is really exciting here. They grew, or rather their balance sheet went from 100 million in Q1 of this year to 150 million in Q2. A 50% growth in their balance sheet. Keep in mind, $150 million in pure cash, and their market cap is $1.2 billion. They've got over 10% of their market cap in cash in the bank that they could use right now. And they have only $24 million in debt on their credit line. So even if they pay off their debt with their cash, they still have over 10% of their market cap in cash, which is just an incredible position to be in, and which pretty much eliminates the chance of bankruptcy. Now, their first half of 2020 highlights: net sales went down 3% year over year to 289 million. EBITDA margin 9.2%, which is flat. Net income went up 4% to 18 million. Inventory went down. Free cash flow was 61 million, more than all of 2019. They accomplished more than they did in all of 2019 and half of 2020, even though there is a pandemic. Net cash grew 183% year over year to 127 million, an incredible position to be in. These are incredible statistics, especially in a pandemic. If you look at other retailers, like Nordstrom, like Macy's, all these guys are doing horrible. All of these guys have revenue declines of 80, 70%. These guys managed to keep it flat and actually grow their profits and grow in other sectors. Analysts are currently expecting Revolve to pretty much stay flat this year, which is just incredible. They're expecting Revolve's revenue to stay flat this year, when there are other companies, revenues are going down 50, 60, 70%. Just incredible things coming from Revolve. And next year, analysts are expecting revenue growth of 21%. I'm going to tell you, I think this is wrong when you take into account all of these new things that they're doing, all the new money that they're saving, and the fact that they didn't decline in revenue for all of this year. I think that next year, they're going to grow closer to 30%. I think Revolve is a company that is going to grow revenues 20% plus for the next 3 to 5 years. And again, I think analysts are wrong with this EPS for next year. They're expecting EPS of 7 cents. I think once this new fulfillment, once this new marketing, or rather once these new techniques are fully recognized, I think Revolve is going to report earnings closer to 8 cents per share next year, which is just incredible. Now, this comes to Revolve's valuation, currently trading at $1.3 billion, around 18 bucks per share, at a forward PE of around 26. So the forward PE here reflects a stock price of around 18 bucks. So it's around 26 bucks right now. I think when you take into the fact that analysts are wrong by their projections for Revolve's EPS, and I think that Revolve's EPS is going to be a little higher than analysts do, I think this forward PE as of right now is actually under 25. I think for any growth company, a forward PE of 25 is good. A forward PE of under 20 is incredible. So I think as of right now, at Revolve's current price, I think Revolve presents good value. Now, what do I think? I think Revolve is the way to play retail. I think Revolve is an incredible way to play the clothing sector. I don't think there's any other play like it. Maybe the Real. I'll probably be doing an analysis on that in a few weeks, but that is a different segment. I think Revolve is the way to play the retail space based on their growth numbers of this year, based on everything they've done. I think it is the way to play, especially since their valuation is under a forward PE of 25. Now, my buy targets for the stock, I think this presents good value anytime it's under 20 bucks. I think it presents great value under 16 bucks. So again, I'm probably going to start nibbling, or if you are interested, or how about I say it like this? If I was interested in building a position in Revolve, I would start nibbling now, Anytime the stock goes down below my cost basis, I'd keep nibbling. And if it ever went below 16 bucks, that's when I start really building my position. Now, in my opinion, Revolve is an incredible company, growing at an incredible rate. If you enjoyed this video, make sure to slap that like button. Thank you so much for watching, and I hope you have a great day.